Well, I'm here. I don't know what happened there. That was that looked like Streamlabs gone kaput. Wasn't Virgin. There's nothing to do with the internet. Absolutely fine. The Streamlabs streaming software just collapsed. So don't know what that was. That was weird. That wasn't the internet. Nothing wrong with the internet. Anyway, hello. Let's wait for people to come back in. About that. What happened there? How many we got? 17. Right, okay. People will find it. If they're in Telegram, they'll find it. If not, they'll come back in a minute. Right. Market's about to open. Market's open. Bit lackluster. So there's your pre-market 15. Not a lot going on. Not a lot of volume. Obviously, we've had a massive move. So the market's going to be a little bit... I think it's going to struggle a little bit to find any volume. But yeah, we'll see. Right. Testing 1, 2. Yop and Radakaye. No idea what that means, Kenny, but yeah, if you say so. Is there a possibility? Oh, sorry. Sorry, I'm just reading Telegram chat now. Right, I'm back. We're just waiting for a few people to come in. There we go. Right. I shall crack on. So, US dollar. CPI figures were mixed. So the core CPI was 0.4 off of a 0.3. So that was positive. The main CPI came out as expected. The year on year was a 0.1 drop. So nothing really to be expected, to be worried about with that, really. Inflation has gone up. So if you look at the key fundamentals now and how that feeds in to the US, our inflation change is now sitting at minus 0.1 and we're sitting on 4.9. So this is the quarterly figure, basically. So what it means is it's coming down still, but not at the rate it was before. So the inflation is interest rate is doing its job, which is all positive, good stuff for economy, etc. But obviously, from a currency perspective, likely to be going back down again. So nothing particularly exciting on that figure. It's all pretty much as expected. Not a huge change on the bias scorecard for anything there either. So kind of business as usual, really, with the US. Not really sure it's got any strength. Not really sure it's got any weakness either. So the Fed swaps downgrade the odds of a 25 basis point in June rate hike, which means basically we weren't expecting necessarily to get a rate hike in June, but they've downgraded that further now. So unlikely we are going to see any more rate increases. So terminal rate on the US dollar potentially is in now, which is good. So this afternoon, be a little bit careful of these indices if you're trading them, because we've just had a lot of movement pre-market open. And usually after that, we don't have a lot of power left in the market. So ADRs off the back of that move weren't very much. So if we whiz through the US pairs, Aussie dollar US pushed up, hit ADR, and coming straight back down off of it. So all these moves, I would say, are fairly good mean reversion opportunities. So took a little bit of loss on the funded account, 1.2% on those moves, but they're all coming back down again now. So 0.5% taken on this account, but you know, nothing's really gone heavily into DD on anything because it wasn't a particularly harsh move, and obviously it's all becoming undone. So there's potential for this just to basically over the next couple of hours come back down to reversion, which is quite possible. So they've just taken that liquidity there, pushed up, pulled back down again. Still got big propulsion gap targets to the downside on the Aussie US. The New Zealand US, same thing. So the Australasian pair's got a big boost basically, but they are unraveling. So those are the only two ADRs we've got. Aussie dollar CAD is the other one, which is Australian dollar. Canadian dollar weakened with the US, and obviously that's pushed up as well into ADR, straight into that propulsion gap, which is rejecting back down again. So we'll see what happens with these moves, but they could well all get undone. So that wasn't particularly bearish or bullish US. It was kind of as expected. Don't know if anybody was watching Forex Factory, just out of interest, when the news came out. They've now got a countdown system they've put in here. You used to have a little green button you had to keep clicking to refresh it. It now auto refreshes and it comes up instantly. So they've improved that, by the way, just in case you didn't notice. Yeah, we'll see what happens with these. If we are going to get the US dollar powering back up again and undoing all of these moves along with the Canadian dollar, then we should expect the indices probably to drop this afternoon. But we'll see. So as the US dollar obviously has come down, if we get a US dollar pair up, US dollar Swiss is probably best. As that's come down, obviously indices have gone up. They do the inverse to what the US dollar does. So up that way. They've upgraded to 2006. Yeah. I know it looks very old-fashioned, this site, but it is actually pretty good. But it does look very old-fashioned. It's a forum at the end of the day, isn't it? So, but that's quite good now. That's automatic. Just not very pretty, is it? Right, there's your 5-minute opening range on the Dow. So it's coming down. Looks good for shorts. Bullish US potentially. I've just got some positions I need to manage over here. 1 sec. Place. Got Euro New Zealand long on, and that's the only one I've got, which is in any kind of danger at the moment. So I just need to watch that for a minute. Right, afternoon, Neo. Outro evening. You take the pre-market 5 NAS? No, didn't even look at the NAS. I was offline. It all went wrong. Very nice. Jeez. Right, yeah. So there's your pre-market 5 on the NASDAQ. Very nice. Big, strong push to the upside on that one. That's a tiny little candle. That was a brave move, taking the pre-market on that. But yeah, let's look at the risk reward on that one. That's ridiculous. 4R. So there's your 4R break on the pre-market. Very well done. If you can hold that, you've got probably a 40R trade if this pumps. But I get the feeling we're coming down today. I think this US dollar is going to rally off the back of this drop. I don't think that was the real move today. We will see. Afternoon, Freeman. Play Salty Games. Welcome back. Gap fills today. Don't know. Haven't looked. Got 2R. 2 and a bit. Cool. Nice one. Yeah, so Dow is out the lows. Watch this NASDAQ potentially running back down to fill this propulsion. So this gap here, there you go. Whoa, that's a big one. Big sell order just came in on the Dow there. Across the market, actually. So watch this gap fill. So there's your RSIs. So these are all potential mean reversion opportunities. You're not going to find it very easy to get on these with reversal alerts, obviously, because the reversal alert is going to be all the way back down at the origin of the move, because we just had a solid straight up move against the US and the Canadian dollar. So you can't get in on a mean reversion with the reversal alerts indicator on these. So these are basically just pushes back down to source. Same with the New Zealand pair and the Aussie pair. The reversal alert's not going to be there. It's going to be back down at this source move here. So these are all mean reverting though. US dollar's pumping quite nicely. I kind of want to take another Euro New Zealand. Aggressive on that one. Okay, you're in New Zealand, just taking another trade on that. This is all getting undone. All this move is undone. It's getting undone. Not real. Very, very big drop considering the figures came out as expected for the US. So I don't see why that should happen. So we're going to get a V-shaped recovery on these by the looks of things. All gaps filled. Which is really annoying because I put a 1.2 loss in and I shouldn't have. But I had to hold it because it's a funded account and it was up at 3%. So didn't have a lot of choice. Afternoon, gremlins. No, I'm not a gremlin. Yes, I did have gremlins, Virginia. Sorry. This time it wasn't the internet. It was actually Streamlabs software. I've got 2 MT4s running at the moment, doing some pretty heavy number crunching. So I've got a feeling that was my CPU going, you need to put off the gas a little bit. Got slipped quite a bit on that push down. Yeah, so that's the opening range break to the downside. That did slip out that low there, so you probably wouldn't have got filled there. You would have got filled somewhere down here. But that's a really nice opening range break. NASDAQ downside as well. So your 5-minute ORB on the NASDAQ is here. So you may have got filled on a long. Shouldn't really, but you are short now. There you go. So that's gap fill complete. Damn. Should have taken that on the funded. That would have been nice. Never mind. So there's all your ADRs today. So there's just those 3. RSI extensions are all the same. There's nothing new to look at on the RSIs. So Euro odd, 4-hour RSI extension to the downside. That is still extended. Long opportunity there. Got one on the H1. We'll be taking a second. Very nice extension on the 4-hour. Looking for it to come back up into all these propulsion, but looking for it eventually to get out the top of that high. The Euro is a long. We're just in the 24.72 zone, where is a really good buy opportunity at the moment. Euro CAD, same thing. So we've just pinned out the bottom there. Oops. So we had that nice hammer go in off the 72. We've just taken that low. So this is looking like potentially a nice 3-bar reversal. When that reversal alert goes in, we're off. So potential good long opportunity on that one. H1 already got one position on here. Down here, just about to get a second reversal alert. That's too close for a second entry. 73. Yeah, just a bit too close for a second entry for me. But looking to push up into these propulsion gaps up there. Euro pound, 4-hour extension. Again, that one's just starting to come into profit. Nice 3-bar reversal going in there. For those that don't know, if you've not been in here before, 3-bar reversal is where the market pushes down hard. And you get some kind of pause candle, which is either a hammer or some kind of spinning top or doji like it is there, and then a push back up the other side. So that is a reversal pattern. So pushing down hard, coming to a screaming halt, buyers taking control. Then we off we go. Just trying to see. There's one there. Look, push, pause, pull. In that case, we had one move in afterwards, but then it came back down again. Down, pause, push, up. Same thing. So that is good. Euro pound. Just be aware anything you take on the pound tomorrow is rate day. So it could go absolutely crazy in either direction tomorrow. So just be aware of that if you're getting into pound opportunities today. Euro New Zealand, opposite opportunity for a long there. This has been a long for ages. So into on this at the moment, 4-hour extended and embedded here. So that was the initial entry. Second entry taken there. Third entry should be about to get into one, I would imagine. Where's the entry on 5-minute? It's not going to be all the way to up there, is it? I'm going to take a manual on this. Just need to calculate it 1 sec. Okay, so I'm just taking a manual trade on this. Let's look for half an ADR, which is 80. Just going to have to manually adjust this. Basically, not going to get the reverse alert on this until there because of that strong move to the downside. But that kind of W pattern there is a market structure break. Normally, you would have an alert on that, but you can't because of the news. So I'm taking a manual on that. I'm calling it manual. Going back to old school. So Euro New Zealand, huge extension. Excuse me. Had a profit take on that one. That was a 38 retracement. We've not had any profit take on this entire move to the downside here. So if you look at this and where we're likely to pull back to on this one, at least 38, which is this propulsion gap here, easily filled. But obviously this one here, and then you've got that support potentially, which is going to act as resistance on the way back up. Obviously got loads of propulsion gaps upside on this anyway, but yeah, really big move on this one. We're looking at now 600 on a 159. So that is nearly 4 ADR to the downside with no profit take move whatsoever. So this thing's going to pop back quite substantially when it does. So Euro New Zealand, very nice opportunity. 4-hour RSI extension. Whoops. Ready to the downside. Trying to take that fib off, which I can't. I have my fib, not that line. Start again. So we've also got coming up the monthly support as well, which is 100 ADR. So if that position doesn't hold, we'll get into another one down there. And New Zealand dollar, US dollar. Huge move on that one to the upside. Comes straight off the monthly. And coming back down to fill that gap and then off from there. So nice RSI extension on that one. Got divergence there on the RSI as well on the 4-hour. So bearish divergence. Again, no profit take. This whole move here on this New Zealand and US just timed perfectly for that move. So 271 pips to the upside off of a 55 ADR. So that's a huge move. 1, 2, 3, 6 ADR. Is that? How big was that? 271. 4.9. So 5 ADR move. All the way up. 5 ADR. No profit take. That's coming back down to here somewhere at some point. So if that holds that high and we get that double top in, previous resistance, we're just going to push back down into here. So if we're going to do that, fine. If we're not, if we're going to do that, fine. Don't care which, as long as we get that pullback at some point. So I've just got the one position on this at the moment. That's on the hourly, which was on Monday. So not gone anywhere since Monday. So today is the first day we've had an ADR all week, and we've only got 3 of them at the moment. So absolutely terrible this week. Just been flat as a pancake. Out at break even short outro. Yeah. That was a fake move, that US dollar, I think. Nasdaq's pulling back out of that propulsion. The Dow, however, is just off the charts. Beautiful opening range break on the Dow. That's your 15-minute opening range. That's a hell of a 15 minutes, isn't it? Basically just A-shaped recovery on the previous move. A very, very, very nice recovery going in by the US dollar. DAX puked. Yeah, DAX and the Dow will usually go together. So, right, so DAX, looking at the DAX, if this is the start of the rally to the downside, we're looking for the gap fill, remember, still. So this is the gap. That's your target to the downside. If you want to hold for a long play to the downside, I like that. Look at that. I shouldn't really trade the DAX. Told myself I wasn't going to trade the DAX, but that's too good. Too good. Can't turn away a trade like that. Risk reward on that is huge. It's a 4R. Down to there. A lot of money. $4.2. 4.3. Okay. Shorten the DAX for a swing. In there, stop above the high. It's a standard stop loss trade. It'll either work or it won't. That high was what we were looking for this morning to be resistance, yeah, remember? And that is the target. But that has been the target for, what did we say, 13, 17 days, something like that. This range has got to break at some point, and that gap is going to get filled at some point. So this could be it. That's not the biggest move we've had, obviously, this one that's going in here. We've had a big drop off of that resistance there, and we pushed down. Remember, we said at this point, we were looking at this, weren't we? And we said, this big move down here into support, we've had that multiple times before. Every single time it's bounced. And it did exactly the same. We pushed down, we bounced again. So we're on our way to at least down here. So once I get down to there, I'll put a break even on the trade. It's not going to be any risk, but it's a 4-hour return. So it's nice, safe opportunity. Dow has just tapped into those lows. Let's have a look at where the Dow's off to. So this is yesterday's low, which we're just tapping into now. Limit orders triggering at the low. This is let me just reapply my template. You know, that's right. What's that line there? Is that something I've drawn in manually? Yeah, it is. I was going to say, don't know what that line was. It looked like it was a weekly level, but it's not. It's something I drew in manually. So yeah, yesterday's low, basically, this could well be just a double bottom, and they're just going to pull it back inside again. If they're not, though, we're looking for 175, 200 ADR, which is what we looked at this morning. That would be your drop back down into there for the Dow. So nice long opportunity for shorts. Why are your MT4s running of your CPU? Offload it into the GPU and take advantage of the CUDA core. I have no idea what you're talking about. Sorry. I don't really have a choice. I have to stream through my GPU. I don't really get a choice on that. Anyway. Oh dear, DAX again. Scared for me? Me? Why would I be scared for the DAX? It's a perfect risk-reward trade. There's my risk. Reward is 4R. Can't go wrong with that. That's on the funded accounts. That's worth $2,500. So it's not a particularly difficult risk, that one. Sorry, what level is that gap, Phil? 519. $3,000. If it works, it's $3,000. If it's not, it's $700. I'll take that any day. Right. So there's all your ADRs hit and your RSI extensions. There's nothing else particularly exciting going on. Just got a bit of that loss back. Going to bank a few more bits and pieces by the looks of things if this US and CAD rally continues. Yeah, obviously the CAD's coming down against the yen. That looks like the yen's powering up. Yeah, big move on the yen. That was a Aussie dollar yen I got out of there. Look, that was that RSI extension exit. So we got big strong move coming through on the yen. They're dumping a load of money into the yen at the minute. So any shorts that you had on the yens all starting to play out. New Zealand yen got short as well, 49. Excuse me, voice is going. So the target's just down at that support on that one. CAD yen. That should be TPing any minute now, really. So US dollar moves, basically, we'll see if we can get bullish engulfing onto these. If we get a nice big bullish engulfing, i.e. railroad track sort of pattern, I think the US dollar is probably going to take off for a couple of days and get all this undone. So all these propulsion gaps we've been putting in, we'll see. We need to get that confirmation of that break above that high. If we do, then we're off. If not, then this could be the start of the move to the downside for the US dollar, and this is just a pullback before we drop. So we'll see what happens, but no real news on that US, I don't think, that's bullish or bearish. New Zealand dollar CAD, if there's any other pairs you want to look at, let me know, because I've covered basically everything that is there at the moment, which is the RSIs and the ADRs. So there's nothing else to look at, really. Everything else we're just in and waiting for it to unravel. So New Zealand dollar CAD. So 4 hour, we're kind of mid-ground at the moment. There's your weekly resistance, which is up at ADR. So that'd be a good looking short opportunity up there. We've got the monthly high at 125 ADR as well. So again, up to there. And you got a big propulsion gap up there on the 4 hour. But hourly, we are kind of stuck midline as well. So had a trade entry there on that one. But at the moment, we're just sideways. So there's no real opportunities. It's all downside targets though. So bearish. Again, US dollar and Canadian dollar, if they rally, or if the US dollar rallies more like it, the Canadian dollar will get dragged along with it and that will come down. This New Zealand dollar is really due a rest. So if you look at oil, we've had a little bit more of a rally on oil. We've got the oil inventories coming out in 35 minutes. At the moment, it's dropping on the back of the CPI figure. But again, all it's done is it's just dropped down to the low of the day. So we've got these propulsion targets to the downside. So on this market structure move, potentially that is what we could look at. So we might get a drop down on the oil inventories back down into there. If we get that drop on the oil inventories, you've got an opportunity to go long from here. However, this is the accumulation break. So it could be that they are just adding into their positions here and going to drive this further to the downside, in which case the Canadian dollar is going to struggle. So oil is a bit of a mystery at the minute. This thing's all over the place. But I mean, it's in the biggest ever range in the world, isn't it, at the moment? So if it does get back down to there and it drops back down, that's a lovely little long, same as that was a lovely little short. So we'll see what happens with oil. I have got the market reverse alerts EA, and I have a question. Is that possible to run different strategies on one single account with the EA? Yeah. So as long as the EA has unique magic numbers, you can run as many strategies as you like. So every instance of the EA is unique. So when it loads, so every instance of the EA is unique. So I'm running one account here with the ADR reversals. I'm running one here with H1, running one here with H4, running one here hedging. But if you want to run one MT4 and run multiple strategies, all you do is you just load up the strategy that you want to run and just make sure it's got a unique magic number. So every unique magic number is treated separately. So if you want to run 3 ADR reversals and you want to, on exactly the same pairs, run a 3 H1M5 mean reversion set files, as long as they got unique magic numbers, they'll be treated differently. So you can do whatever you like. However, obviously, just be aware of exposure. If you're going to run 3 ADR reversals on the same pairs and you're going to run H1M5 on the same pairs, there's a high probability, if you look at the ADRs we got today, so Aussie dollar CAD, for example. So we've got an ADR hit today on the Aussie dollar CAD, which is straight up, straight down. But a lot of the time you'll find you will have an RSI extension as well. Because if we are going to hit ADR and we're anywhere above the 60 level, usually that is enough to get you extended on RSI as well. So you will basically get into an RSI M5, H1 M5 short, and you'll get into an ADR M5 short at the same time. So you'll take the same trade twice. Obviously, depending on how you're running them, I run different targets. So ADR reversals, I run a third of an ADR as a target. H1 M5, I run half an ADR as a target. Not a lot in it. But the idea of the ADR reversals is a quick scalp in and out if possible, or, you know, a couple of days max, really. but just be aware. Good news, world. Good news, world. Gold. He's asked for it. Someone's asked for gold. I can guarantee I know this is, well, I was just going to say, this is going to be pushing at the moment, but probably pulling back down again this afternoon, depending on what the US dollar does. If we get this unraveling, this US dollar move, we'll be off to the downside. But I don't know. Depends what happens with the US dollar, doesn't it? There's a lot more downside targets than upside targets off the back of this. So we had the run into the safe haven when the banks all started to go wrong. The banks at the moment are looking shaky. So I get the feeling, like any other US dollar cross, we're going to see a little bit more of that. We'll get strength on the news. We'll get weakness against other news items. But I don't really see anything for gold to do at the moment but come back down again. However, if the banks go pop, that's going up. Don't know. At the moment, you're up at the monthly high. So we're just reacting off of last month's high. Yeah, bang in the middle of nowhere. Don't know, up or down, one or the other. There's no real signals on that for me at the moment. There never is on gold because I don't trade it. But so there's last month's high. We tapped straight into that, rejected. We just tapped it again. But we're in an uptrend. So, I don't know. Confusion. If you're confused, do not take the trade. DAX is pulling back. So we broke that low. Just putting back into propulsion at the moment. So see if we can get pushed back down into there. If we can get that this afternoon in ADR, we're off to the downside. Dow, same thing. Dow's come straight off yesterday's low, pushing back up into propulsion. So we're looking for some sellers to start adding into their positions there. Hopefully continue on the way back down again. Afternoon, Baggy. Afternoon, Dreska. Anybody got any other pairs they want to have a look at or anything else they want to discuss? Somebody mentioned another new prop firm in a Telegram group today that I'd not seen before. And I can't find the name of them now. Oh, yeah, Maven. Maven Trading. Not heard of these guys, but apparently they're 8 cap. Again, another 8 cap, Trustpilot. I can't really see anything on these guys that's anything more exciting than my Forex funds. So 100K account is $500. Same price as my Forex funds. Profit target is pretty much the same. Drawdown pretty much the same. Everything's pretty much the same. They do have a one-step evaluation, which is more expensive. But you've got much tighter daily drawdown and much tighter trailing. So this is for scalpers, really. Quite expensive for 100K. But that's very expensive for 200K. That's a lot. $1,200. But yeah, I don't know. Never heard of them, but had a quick look at the website. Been going since August last year. I know. So they're fairly new, not been around long. I love it when prop firms have got a whacking great affiliate at the top there. How to inspire confidence. They're focused. The prime navigation on their website is focused on affiliates making money. Not particularly great. Okay, propulsion gap. First propulsion's filled. Tapping into this area on the Dow. Let's see if we get some sellers coming in here. Thank you. However, can one use the market structure on 1 minute or 15-minute time frame and scalping? Yeah, you can do if you want to. I don't. I wouldn't recommend trading 1 minute chart because you're literally trading algorithmic chop. So there's no structure on a 1 minute chart. Just data. Dreska, they seem okay. They have a Discord. Yeah. I mean, they're like all these other prop firms. You know, like I said, that's why I put this together on the website, this trader funding section. Any new prop firm that comes along, first of all, if they're E8, if they're E8, 8-cap broker, they're not very good. And they are just a pop-up shop, if you like, white label prop firm. If they can't beat the targets on these guys, who are all massively established companies with trading history, I've been funded with half of these guys myself. If they are not cheaper than these guys, have better trading conditions than these guys, targets and minimum trading days, etc., and payout periods, just use these guys. They've been around forever, are all reputable firms, apart from Surge Trader. I like Surge Trader, but they're E8, 8-cap rather. So, but they have a 365-day evaluation, which is quite good because this is you could position trade that very easily with tiny risk over a long period of time. So that could be a real slow burner. And their funding, they're not too expensive. The only problem with them is leverage, tiny. So that's the only issue with them, really. And you've got to use a stop loss. Oh, sorry, yeah, that's the other reason. You've got to use a stop loss with them. But yeah, any new prop firm you come across, yeah. So all I ever do when I look at a new prop firm is I look at the first thing I look at is their price. Are they cheaper than my Forex funds? If they're not cheaper than my Forex funds or they've got better conditions than my Forex funds, use my Forex funds. There's no reason not to. There you go. I couldn't have got much worse entry on the DAX, could I? I entered there. Breakout. Kindly demonstrate one example of scalping. I can't because I don't scalp. You're in the wrong room. If you want to know about scalping, go somewhere else, basically. I don't scalp. I do scalp, but I don't like scalping. It's hard work. If you use a stop loss, you're going to get stopped out. Scalping needs a stop loss. Therefore, you get stopped out. Go and watch the position trading bootcamp. You'll see how I trade. I make money in a different way to others. Right, that's all I've got for you today. There's not really a lot else to look at. We're a bit light on the ground on signals this week. We have been all week. The only thing that is really massively extended still is this Euro New Zealand. Yeah, it's just basically a case of waiting on everything that's been kind of moving this, or everything we've got into over the last week. We've had 2 sideways days so far, and all we've had today is a push and a potential pullback. So there's literally been no movement now for 3 days. A little bit of movement on the euros, but everything else is kind of sideways. I get the feeling we're waiting to see what happens with the pound interest rates. So this is the last interest rate change for the G8, basically G7, whichever it is now. The main currency pairs, basically. This is the last rate change we've got coming up. So once that is out of the way, we kind of know what's happening with rates moving forward. So the next one we've got is miles away, but we have got FOMC next week after next, isn't it? Yeah. So it's week after next is FOMC. So, oh yeah, we got the New Zealand rates. Won't worry too much about that at the moment, but so that's all the main rates out the way tomorrow. So I get the feeling all this hanging around is waiting for the UK basically to see what's going to happen with our rates moving forward. So there's no other news apart from Jordan, who could put a spanner in the works for the Swiss franc a bit later on. Other than that, it's the pound tomorrow. We're waiting for Bailey's press conference, so it's a little bit of a dud week this week. Nothing much is really going anywhere, is it? So one of those weeks. Last week was amazing. 30% off of all strategies last week. This week, meh. So that's the way it goes. Some weeks you just have to sit there and wait. Do you advise to take trades a few minutes to and during the news session? No. Good news. I can't explain my strategy. It's a 12.5-hour course, and it's all free on the website. Links below. I position trade. News is important. News moves the market, but I don't trade around the news. I don't trade the news. I position trade currencies. So go and watch the bootcamp. It explains fully how I make money. Would you stay in the euro pairs? Yeah, I'm in the euro pairs. I've got exposure on the euro long at the moment. I can't get out because I'll make a loss. I'm long. As you can see, there's loads of longs on here. Got this is the H1M5, 4 exposures long at the moment. Obviously, wouldn't advise taking all, but that is the exposure at the moment on the euro long because it's come down. So we're looking for the mean reversions on them. So if you look at those 3 pairs that you've mentioned there, the euro CAD. So euro CAD, we've just filled that last propulsion gap to the downside. So we're now clear to the downside. We're down at weekly, monthly support, potentially. So if it does drop another leg, that's where we're going to find limit order triggers. We've got 3 big propulsion moves, 2 of them up towards that potential resistance, euro CAD. So this whole move here, we're looking for a pushback up into there. I've just got the one position on H1M5 at the moment because that was the extension there. So that was the first entry. Second entry, $2.9. 96 pips. Yes, that's not reversal. That's see again. That's one I kind of would take a manual on it. So 3/4 of an ADR, which is what I have the EA set to take, is 96 pips. That was 83. Uh, 65 is target. So from my entry to there is 82 pips. So if we are going to push back, which is what I suspect, up into there, that is going to get me out with a profit anyway. So I'm not going to add one in there. I'm going to let the EA manage it. So that's euro CAD. Euro pound. Again, if you look at euro pound, we're at the lows on the euro pound at the moment. So this one is actually a lot deeper than the previous monthly levels. So we're pushing back into this propulsion gap, this big area here. So we'll be getting some resistance out of this at some point. Got one position on, again, looking for long move on that one. What was the other one? Euro New Zealand. That's basically the same as the Euro odd. Again, nice extension on RSI. We got that entry there was in and out. Then the second entry, or first entry again, was taken there. And since then, we were embedded back down below the 20 level. We haven't been back down below the 20 level this year. So this is the strongest, deepest move we've had off the back of the interest rates. So again, monthly low, which is 100 ADR. All those profit targets, these propulsion gaps to the upside. Looking for those all to get filled, basically. If you look on the hourly, we've got this area here to come and sort out, which again is just below the monthly low. It's a 150 ADR. So may need another position in there before it comes back up into there somewhere. That accumulation is a good target as well. That is a previous monthly high. So yeah, like all of them long, just waiting for the profit take moves to start on them. Daniel, do you allow hedging with your H1M5 strategy? Yeah, if it wants to. It's not often you'll get hedged on H1M5 because the way it works, basically, with H1M5, you're looking for an H1 RSI extension to the upside. You're entering on a 5-minute and you're taking a short. For you to get hedged, RSI has to move all the way back down to here to take a long. If RSI gets all the way back down to there, you should be out of your shorts. Yeah. So if RSI pushes up, the only time you really get hedged on the H1M5 is when you get multiple positions, which then go into an accumulation, and the RSI basically comes down and manages to trigger a long before it hits your downside target. And then you get a long opportunity, but it's very rare. You won't find this hedges very often. It does every now and again. You'll get a hedge on, but it's not the norm. Because obviously, bear in mind what we're doing is we're playing mean reversion. So if it does mean revert, which it does 90% of the time, we're out. So by the time you get far enough extended to get your other position on the opposite side, you're going to be out your shorts. So it's very, very hard to get hedged. But it will do it if it wants to. If the rules are met, it'll do it. If the EA is set to 3/4 ADR, what have you set for spacing? It's just the H1M5, so it's the usual. So distance between trades is 3/4 of an ADR. The question? Yeah, so that is 3/4 of an ADR and 1.3 multiplier, which is what I always use, 1.3. So this is slightly aggressive. 3/4 of an ADR between trades, half an ADR target, or 0.5%, whichever comes first. It's exactly this. It's just the H1M5 mean reversion set file that has always been used. There's nothing different on it, as far as I'm aware. That is it. The only difference is it was using 70-30. It now uses 75-25. So I've made it a little bit more conservative with the entries. Brian, we all paid for them. GNW do the same. Oh, Good News World, yeah, asking for free indicators, yeah. If you can't afford to buy an indicator for someone that gives his entire life to streaming and teaching you how to trade for $49, you're not going to be able to make much money, are you? Because you haven't got a trading account. Sorry to break it to you, but you need money in this industry to make money. Brian, request. Yeah, anyway. David, since I am in the same trade, where is your average on Euro New Zealand? It's the green line. Can't see it, can you? So it's 173.779. But that is because I've just taken a manual here. Just because I don't think the EA is going to get an entry. If the EA basically, if this pushes down further, because I need the EA to get me in 3/4 of an ADR apart, which is 159 times 75%. I must put that on the part so I can see it easily. 119. So for me to get in on this, we've got to be 119 apart on the entries. So this reversal alert, if this is the last pop before the push, that is only going to be 70 pips. I need 119. That is 108. That is 138. So 119 is kind of here, which is that W pattern. So I've entered a manual there to bring the average down to 170. That gets me within ADR. I just don't, if it pushes down further and we get a reversal alert and it triggers an entry, I'll cancel that off and let the EA manage the whole thing. But I'm just doing it manual because this has come down such a long way, so fast and so hard. What I'm worried about is the spring back being very quick. So I want to make sure I'm ready to take it. I think there's a possibility that we could hit that accumulation and just sit there for a little bit because we've got no news on the euro coming up, and the New Zealand dollar rate is 2 weeks away. So there's not any news catalysts for this over the next couple of weeks, really. So what I'm worried about is just going into stagnation and accumulation. I think the euro is going to pump. They're certainly bullish on it. We've had loads of bullish news on the euro, and we keep getting bullish news on the euro. There you go. Some ECB officials begin to think September rate hike may be required. Yeah, so again, bullish. Yeah. We talked about the June, and we've talked about July. They're now talking about having another rate hike in September. It's all bullish euro. There's no reason this euro should be coming down that hard. They're trying to talk it up. What they're worried about is the same as the Fed and the yen. What they always do is when they see their currency coming down too fast and too hard, they'll put out a load of hawkish comments and say, we see this happening, we see that happening. It's all good news, everybody. Quick, come back into the euro. Exactly the same as the yen does. When the yen is being trounced and everything's pushing hard against the yen, they intervene. And the euro and the US do it with words. They come out and say things that make the market get encouraged into buying the currencies. So we're waiting on that one. It'll come up. A much bigger move than expected on it. DAX is just starting to pause. So we're having another run at that low potentially. So we're either going to get pushed back up, or this is going to be high, low, lower high, lower low is going to be put in at ADR. Hopefully the latter. Daniel, I had one ADR spacing in my set file with 1.3. There's no right or wrong. You can use whatever you want. Entirely up to you. The lower the ADR, the more aggressive. So one ADR spacing is fine. However, we know that the market spends 58% of its time sitting within ADR. So if you use ADR as spacing, you find that it's more difficult to get into entries. If you go into a push and accumulation and then a push, you'll find that you won't get a trade in there, whereas using 75% of the ADR will get you a second entry in. So it can be negative because it gets you into more positions faster. But equally, if we go into a push, accumulation, pull, and drop, you get out. Whereas if you haven't taken a second position, you won't. There's no right or wrong. It's the same as the opening range breakout EA. Do you use the 5-minute, the 15-minute? Do you use the pre-market? Some days they will work, some days they won't. You'll be looking at it going, oh, I wish I'd have used the pre-market today. I mean, today, if you look at the Dow, if you use the 5-minute pre, you were like, woohoo, that was a lovely quick 2R return. And then I got the short as well, which gave me something ridiculous of a return. If you took the 5-minute, beautiful. However, yesterday, you'd have looked at it and gone, oh, if only I'd have taken the 15, I wouldn't have been chopped to death. And it's exactly the same with ADR spacing when you're position trading. Some pairs you'll be thinking, oh, if I'd have used a 0.75, that would have been in and out in 2 positions. As it was, I entered into 4 positions, 4 ADR apart, and was stuck in the thing for a week. You won't know until it plays out. There is no right or wrong way of doing it. Half an ADR is kind of the aggressive one, which is, Diamond, other people use half an ADR. And it is great and aggressive. and it works very, very well. Sometimes, though, it will squeeze you too hard, too fast. So if you'd have got in the Euro New Zealand, for example, using half an ADR spacing, looking at where we are here. So there's one entry there, number one. Entry number two is there. I've just taken entry number three. So half an ADR on this is 40. So from that entry there, that's 40 pips. Yeah. This is 130. Yeah. From there down to there, second entry is 130 pips. 40 is half an ADR. So in theory, you could have got 3 positions in there. You could have had position 1, position 2, position 3 by the time you got to there, and then another 3. So you could be sitting in 6 trades here, whereas I'm sitting in 2 or just taking my third. So in squeezes, the tighter the ADR between your entries, the more drawdown you're going to have. Again, tolerances. The more aggressive you are, the more dangerous it is. But the faster you will scale out of those positions. However, you will also get in and out of positions a lot faster when we're not doing squeezes. So when you've got positions on other instruments where we're not getting big squeezy moves, you know, that there, for example, you could have been in and out multiple times in there in 3 days. Again, there's no right or wrong. You just have to try. If you're going to use more aggressive, what I would say is if you're going to go with a more aggressive setting, I would reduce the risk. So where we normally get in with 0.2 or 0.25% per entry, if you're going to get in more aggressive or get into more trades with more instruments, drop your risk down to 0.1 or 0.15. You can always up it if you're feeling this is not aggressive enough, but you can't drop it if you're too aggressive. So if you get in aggressive and you get into a squeeze and there's nothing you can do about it. Whereas if you get in too light and you find that you're not making enough money when the trades work out, you can always up your risk. Better to go up than it is to be up and wish you weren't in it. If you know what I mean. David, I would feel much more comfortable if Euro New Zealand can pass this 1 hour. Yeah. So if we get back above that propulsion gap there, we've got a chance. Basically, we need to break this accumulation here. By the time we do that, I'm basically break even anyway. So, but always look below where we're going. So, you know, if the market will move wherever the market wants to move, we've got no control over that, we know. So either this is going to come up and do these propulsion gaps, or it's not. If it's not, where's it going? It's certainly going to find limit triggers there at the monthly low, and it's certainly going to find limit orders more likely than not in that 150 ADR propulsion gap. Failing that at 225 ADR, it's going to find some more support there as well. So this would be a good squeeze. You should be in probably 6, maybe 7 positions, somewhere between 5 to 7 positions by the time we get down there. But if we get down there without having any kind of rest, this thing's going to be shot. We're going to have divergence on the RSI. It's just going to, it's massively bullish, but it's obviously a lot more catastrophic for the euro than they were expecting. So hence Lagarde coming out and trying to talk it up. Well, not Lagarde. Some ECB officials. Lagarde being obviously the main ECB official. We're still in greed mode as well. Look. Greedy guts. All right, just in euro pound is moving. So I've got that long one as well. Again, euro strength. There was talk about the pound dropping tomorrow as well. I saw coming through on the news today. I think it was one of the ratings agencies. Yeah, Deutsche Bank it was. Potential dovish risks at the Bank of England meeting on Thursday. So potential for Bailey to talk down the pound, they suspect. So we'll find out tomorrow, won't we? Crude oil inventories, 2.95 on a forecast of negative 2.5. In theory, that should be bullish oil. Nice big spread there. A little bit of a rally potentially on oil. Didn't get the reversal alert, look. Support rectangle held beautifully on that. Did you do pound New Zealand? Haven't done pound New Zealand today. So that's sitting down at monthly support. So that's the previous month's high. Tapped into it again. Resistance. So resistance, resistance, support, 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 support. Propulsion gap targets to the upside. But again, pound New Zealand, 100% down to tomorrow. We don't know where this is going. So right now, it's a good looking long from a support bounce. However, tomorrow, it's going to depend what happens with the pound and the rates. So it goes either way, doesn't it? Is it true to say squeezes are rarer? They're not rarer. They are just when they are. A squeeze is basically down to when you get into a trade. So you can have 3 people trading the same currency as a position trader, and one will be in a squeeze, 2 of them won't, because it all depends on how fast and hard something moves and how quickly you scale into something. So I class a squeeze as something when we get into 2 to 3% in drawdown. That's being squeezed. But the squeeze is on your account, not on the currency pair. The currency pair, some people will look at this move here and say that was a squeeze. To me, that was just 3 entries and an exit. That was a normal position. However, if you'd have got in there and you were spacing your entries there, 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 and there, by the time you get to there, you're squeezed to hell. Yeah, all that is a 7-day rally and then a profit take off of the 7-day rally. But the squeeze is determined by when you get in and how close your positions are together, how big your positions are. It's your account that gets squeezed, not the move. You can survive a 2-month push against you if you use 0.05% of your account on every trade and take them 1 ADR apart. You'll be looking at your account going, oh, well, I'm in 1.7% of drawdown after 2 months of movement. That's not a squeeze. However, if you got in with 0.5% of your account and spaced yourself 0.25 ADR apart, by the time you've got through that 2-month squeeze, you've blown it. So a strong push in one direction is, and whether or not that is a squeeze, is determined by your entries. So you can never call when a squeeze is going to happen because you don't know. But we've had one squeeze this year, maybe 2, one or 2 squeezes this year. Pound New Zealand was one. Why haven't I got all my history on there? Okay. So pound New Zealand being one. So that was an entry there. That was an H1 entry. So entry, 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 exit. So that was what? 28th of February all the way through to the 3rd of April. So that was about 5 weeks. That isn't really, I don't think, a particularly strong squeeze, but that's probably the worst move we've had this year so far. And then the pound CAD as well. This one here. So that started there, which was and exit was last week, wasn't it? So that was on the 19th of April. That move started and got out of it on the 5th of May. So 6 weeks. That was the squeeze. That was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. That was only 12 days. What am I talking about? 19th of April. Yeah, April, May. Sorry, I was thinking March. That's literally all we've had squeeze-wise that I've experienced anyway. I think. Just trying to think if anything else has gone. Aussie, New Zealand there's 1, 2, 3 out. 1, 2, 3 out. See, everything's been sort of 3, 4 positions max, really, so far. 1, 2, 3, 4, 5. CAD Swiss. Oh, yeah, CAD Swiss was another one. Yeah, sorry, that. Again, what do you class as a squeeze? To me, this was just a profit take. That's a normal move for me. Some people might call that a squeeze. I call that a pullback. But no, it depends. Like I say, it depends how you look at it. There's one there on the CAD yen. 1, 2, 3, 4. Exit. Euro CAD. 5. Euro CAD. We've got much more out of that. Yeah, it hasn't been one really. A very nasty one yet at all. Pound CAD, as I say, Pound CAD and Pound New Zealand are probably the worst so far, I think, this year. 1, 2, 5 out. New Zealand Swiss. Again, this is a good example of propulsion gaps. Look, we got into this one here, first entry, looking for a long target, and it didn't. It dropped. So we got into a second one. That was now the propulsion target. Didn't make it. Got into that propulsion gap, fell. Took a third one. Propulsion gap target could have been adjusted from there down into that one. Tried to push up into it, couldn't. Push down, another entry. Propulsion gap target there or there. This one probably wouldn't have been a break even. That one definitely would have been a profit. Again, just dropped. Took another position. Then we could have moved the target down to that one or that one. That one we got out on, that propulsion gap. So this is a good example of how to use propulsion gaps in position trading. As the price moves down, it makes propulsion gaps. So you just move your target down, propulsion gap after propulsion gap, waiting for the pullback to get into one of those and exit the position. So this one, we had to get out of that one. But look at all the losses taken. Loads of scaling out all the way down there. So this probably was a loss. New Zealand dollar Swiss. So 1,300, 1,500. 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 19, 21. Yeah, so we made 1,500, lost 21. So that was negative $700. So that whole thing there, from getting in there and being wrong for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 15, 16, 17 days, we lost 0.7% on that trade. How many times would have you got stopped out trying to catch that falling knife if you used a stop loss? However, I lost 0.7% of my account in pretty much a month. 20 trading days in a month. That took 17 days to play out. But that was the loss. That's why we position trade. Yeah, it's just a squeeze is going to happen. As long as you're scaling out of the squeeze and you're doing drawdown control along the way, the only time you're really going to get hurt is if you get multiple squeezes happening at the same time. So you would need to be completely wrong direction on multiple currencies at the same time. That's the only time you're really going to get hurt. And you will take loss months. So those months you will take a loss of whatever you take. There's nothing you can do about it. But as long as you're positioning and scaling correctly, worst case scenario in a month is you're going to lose maybe 1% of your account. You're going to go into drawdown, obviously. You're going to take some drawdown on the account. There's nothing you can do about drawdown. That's what drawdown's there for, to draw down. That's what we use it for, to make money. The account's balance is there to be drawn down into. That's what we call risk. DAX is stuck at the lows. We haven't managed to make any progress on the DAX. So that propulsion gap is holding the initial sell-off. However, we are stuck down at yesterday's low. So we are looking like we're trying to get down on that. The Dow as well. Propulsion gap held nicely. That one also pushed in and pulled back. If we get that low broken, I think we're off today, which will be nice. Oil inventory, 2 minutes. That was 10 minutes ago. I'm way behind on the chat. Oil rally should help the CAD. Yeah. What did it do? This is what I mean about... this is why I just don't like oil. It doesn't seem to have any impact. That's a negative number on oil. I.e. we've got 3 million barrels in stock. We're expecting to have a negative balance of 2.2 million. So basically we've got more supply than normal, meaning that as there's more of it, they should be charging less for it. So you should get a big drop on oil. What we actually got was a push up, and now it's starting to come down. But look at it. It just doesn't put in those massive moves. Dow's out the lows. We're off. So it's just, oil's just nasty. Bella, bought the EA, thinking of using it for my Forex funds. What settings shall I use? I can't answer that question. There's too many options. If you're going to use it on funded, if you're looking at, I don't know what you were looking to do. If you're looking to position trade on funded, keep your risk small. So with position trade, if you're talking about the market reversal alerts EA and position trading on a funded account, what you have to do to pass the funded account is you have to be a little aggressive. But it depends who you're getting funded with as well. So if you're using someone like My Forex Funds, your drawdown is recalculated every day from your open drawdown balance. So if I open tomorrow at 1,300 in drawdown, I then get 5 grand added onto that. So I can go down 6.3 basically. So which is one of the reasons I like My Forex Funds, the way they calculate everything. But you're not going to control this. So make sure you control your exposure, no more than 2 entries, and maybe use 0.2% per entry. That's conservative. If you go in more aggressive, something like 0.35% risk on half an ADR movement, it really depends the day you start your evaluation. So if you start your evaluation the day that, let's say, for example, let's look at an example. So if you started your evaluation last Thursday, you've just literally gone into drawdown on this thing, on Euro New Zealand. So you're sitting in 1% of drawdown, having taken 0.4% loss. Right? So that's 1.4% down on your account. That's just one currency pair. However, if Euro New Zealand had done that for the last 4 days, you'd probably had 0.7% profit. You are absolutely not in control of whether or not you pass an evaluation with any trading strategy. It's completely down to the day that you start your evaluation. So if you're a scalper with a 70% strike rate, for example, if you were brilliant, you're a multimillionaire, fantastic. If you were a scalper with a 70% strike rate, and the day that you took your first evaluation, you had 4 losing trades in a row at 1% risk, you are negative 4% on your account. You might be absolutely brilliant and have a 70% strike rate, but today you lost 4%. If tomorrow the thing just chops like that, again, you might lose another 4%. So you've now got 2% to play with. So tomorrow you're going to have to be very lucky. However, if the market conditions were different and the day that you started your evaluation, you had a 70% strike rate and you had 7 trades in a row worked, you're up 7% on your account, assuming you're going from 1-to-1 risk reward ratio with 1% risk. Yeah. But whether you go up 7% or you go down 4% has got nothing to do with your trading strategy, you as a trader, or anything else apart from the fact whether or not the market decides to cooperate with you when you enter your trades. And every time you enter a trade, the odds are exactly the same. It's either going to go in your direction or it's not. It's a 50-50 shot. So whenever you use, doesn't matter what set file you use for an evaluation, it'll have a different result for you, me, and someone else, depending on whether we start in the morning, the afternoon, or the following day. You're going to have a completely different result. So I can't really answer what settings to use. It's entirely down to you. Some people like to be aggressive. DAX is just coming back to my break even. I was just looking at that thinking, that's not a support. That's my break even. So DAX is just coming back to break even. Just putting a new low. So we've got high, low, lower high, lower low. Structure's looking good. So yeah, so it depends really how you want to trade and how aggressive you want to be. So what some people do is they go really aggressive. So they'll use, I would say if you're going to use any set file, use something with a higher probability. So ADR reversals, the ADR set file is brilliant because most of the time it banks regularly and it's in and out with very little drawdown. So they're sitting in 1.21% at the moment, banked 11.19% this month so far. We have got into, what's the max I've seen that out this month? 4.5 maybe? Not sure. But look at it, it's 1.2% in drawdown with 11% banked this month. We're on the 10th of the month. So that's target hit in 2 weeks. Done. However, pick another month. You could be sitting in minus 8% of drawdown. Yeah, with 2.2% banked. Sorry, this is the H1. Sorry, this is H1M5. This is ADR. Sorry, wrong set file. That's sitting in 3.27 with 2.96. You've got 2 squeezes going on at the moment here, which are totaling pretty much 3% of drawdown. Prior month, that did 22%, I think, with hardly any drawdown at all. Do you see my point? I can't give you a set file that will work. However, if you're happy to play the long game and spread your evaluation over a period of 30 days, reduce your risk. Or if you're going to use the H1 M5 mean reversion set file, I have mine set to 75-25 for the RSI. Set it to 80-20. Yeah. That is going to get you into less drawdown, but it's going to get you into less trades. So what you could do is up your risk. So go to maybe 0.35% risk per trade. Or if you want to be really risky, 0.5% risk per trade, but get in at 80 and 20 extensions on RSI. You're not going to get as many entries, but by the time it gets to 80, there's a very high probability of that pullback. So milk it with a higher risk. But you are reliant on the market actually managing to move. If we get a week like this week, where we've had, this is the first day we've had ADRs because the market's been flat as a pancake. So if you get a week like that, you're just not going to take any trades. I don't think we've had an 80 extension this week, have we? I can't recall seeing that lit up this week at all. So you wouldn't have had a trade this week. But, you can get in with 1%. There is no right or wrong. It's when you get a funded account, if you, like, I've got a $250,000 account going at the moment with Feedal Crest, which is sitting at, it's only in 2% of profit at the moment. No drawdown on it. The trades I've got open at the moment have got potential to bank 4 to 5%. So it could be up to 7% by the end of the week, which is pretty much target hit. When you get a $250,000 account funded, if you drop your risk down to 0.1% per entry, you'll find it very difficult to hit your drawdown limits. However, you will still be banking $300 to $500 per position. Yeah. Most people, if they got 3 to 5 trades a week closed out, could live on that and pay the mortgage with a £250,000 funded account. You've got to get it though. So your choice is, do you go in aggressive and try and pass it and be happy to take maybe 3 to 5 evaluations to get one over the line? Or do you want to go super conservative and take your time? There is no advice anyone can give you on that. It's totally personal choice. You can pass an evaluation in a day. I've passed an evaluation in a day, both stages. Scalping. But you've got to have the luck on your side. So where ADR set file, yeah, it's in the, if you look at the blog post, so go onto the website and to the Market Reverse Alerts EA. There is a link there to the starter set files and test results and the manual. So that's where you get your set files from. They're all down here in a zip file. I'll put the link in. But those are, I call them starter set files. They are to demonstrate the main strategies: mean reversion, ADR reversals, and hedging. Those are the 3 main strategies to position trade with, and you pick the one that you want or combination of the ones that you want. But the actual settings are entirely up to you. This is a good demonstration here with the hedging set file. This is the 5-minute hedging set file using the 60 zone plus 68 in this case. If you were to set your RSI settings much higher and say 80, yeah, you would have only got that one, that one, that one, that one, and that one. Yeah. So, and that one there, that one there, that one there, possibly that one there. Yeah. So the number of trades is going to be reduced. However, the strike rate is going to be increased, or rather the speed of exit, because there's no such thing as a strike rate with position trading. We pretty much win all the time. But it's the speed of exit, which is really the win when you're position trading. If I can get in today and get out today, 100% trade. If I can get in today and get out in the next 2 days, awesome. If I can get in today and only have to take 2 additional positions to get out this week, happy. If I get squeezed, unhappy. But the number of times I get squeezed compared to the number of times I get in and out within a day, a week, or less is exponentially higher, because I'm getting in when the market is already extended. Yeah, we're getting in here because of that. If you get in because of that there, you would have taken 1, 2, 3 positions and then got out here because you took a riskier position because the market was less stretched. Remember, mean reversion is all about getting into the market when it's at an extended condition. So this is the market condition indicator. We are extended. The signal indicator is a reversal in structure. And then the profit is a target within its normal average daily range. Combine those 3 together and you've got something which works very, very often. Not always, but when it does work, you want it to work as quickly as possible. We all want to be in a trade, like that trade I've just taken on the DAX. The ideal for me right now is for the DAX to just go, yep, no problem. But that's not what's going to happen in real life, is it? What's going to happen is it's going to do this all day today, and then tomorrow it will do that, and then it will do that, and then it will come back to here. And then on Friday, it will move back down into mid-range. And I'll be sitting here on Friday going, 2 days in, I've moved that much. What we want to happen is this to go straight down and fill that gap. But that isn't real world. So all you can do is get into positions and manage them. You have no control over whether that gap ever gets filled or when. All you can do is go, that's my idea, and I'm going to manage the position. If on this funded account, this evaluation rather with Fiddlecrest that I'm running over here, I say over here because I've got multiple monitors, that monitor, if that 2% turns into 6% by Friday, for example, and I'm pretty much flat, and the only thing I've got on is this DAX, I might place a pending order there to see if I can get a quick 2% drop and not get that gap trade. I will adapt because my job is to return a percentage of my account, whatever account, whether it be an evaluation, whether it be a stop loss strategy, a position strategy, whatever. My job is to return an amount of money on my investment. My investment in this case is a 100K account. My return is 11,000, which is 11% of my account. My return I want to target is 5 to 15% a month. That's my job. So I'm not going to go, I'm going to go for the gap fill just because the gap fill trade is on. If this thing moves down to here and I'm happy to take it at $1,500 profit because everything else has gone well, I'll take it. And again, that is something that's totally in your control, and you will make decisions on that as you go along. And again, when you take your trades is going to make that difference between when you exit your trades as well. So just go with it, go with the flow. Don't worry too much about settings, set files. Worry about getting into the market and manage the trades. The bigger the RSI extension, if you're doing mean reversion, also with ADR, this works with ADR as well. It's the same rule. With every mean reversion trade, it's the same rule. Yeah. The bigger the condition indicator setting, whether it be RSI, Bollinger Bands, ADR, whatever you use as your market condition indicator to show you when the market is stretched, the bigger that reading, the more probable the trade will work faster. So if you use the 60 level and the 40 level, you can see you've had a hell of a lot of trades. Yeah. If you use the 70 level, you've had a lot less. If you use the 75 level, you've only had one. If you use the 80 level, you only had one trade so far this year in January. That's it. You've had one mean reversion trade in January, and that was it. But it's 100% strike rate. What do you want? Same with ADR. If you use 100 ADR for your mean reversions, excellent. If you use 150 ADR, you're going to get a lot less entries. But if this thing's moved 150 ADR in one go, chances of a pullback are much, much higher. 12% chance it's going to go higher. There's a 42% chance it's going to go, lower. So there's a 42% chance it will get beyond its average daily range, but there's only a 12% chance it goes beyond 150. So if you only take 150s, there's actually a 90% chance of it pushing back. Whereas here, there's a much bigger 60% chance of it pushing back, isn't there? So, and the same with anything. If you're using Bollinger Bands, if you put Bollinger Bands on here, if you want it to be extended outside of Bollinger Bands and close outside, you're going to do better than if you want it to just spike outside the Bollinger Band. If you want it to close 2 candles outside the Bollinger Band before you get in, you're going to have a better strike rate than if you have just a piercing or 1 close outside. If you require 3 Bollinger Band, 3 candle closes outside the Bollinger Band before you get in, you're going to get a lot less entries. But pretty damn sure that's going to revert to the mean moving average on the Bollinger a lot more than it will if you just wait for a spike. So all mean reversion strategies will benefit for you waiting longer for that more stretched condition before the profit take move starts. And again, the market reversal alerts EA is no different. And you're using the RSI as your condition indicator or ADR as your condition indicator in those cases. So you pick what you want. And that's going to depend on how patient you are. If you're an impatient trader and you need to be in the market a lot, you're going to have to set that lower. If you want to get in with high risk, and very few trades, you're going to set it higher. But all these do, these set files, they explain the strategies and they are set up for those strategies. And all you do is you go into the EA and you go, right, I really like the H1M5 mean reversion strategy. However, I want to be super, super safe and I'm going to use 80-20. And I don't want to get in too close together. So instead of getting in at 0.75, I'm going to get in at 1 ADR apart. However, my target is going to be 1 ADR or 1.5% gain on my account. That easy to change. Hit the OK button, and now you're trading the same strategy with different parameters. More aggressive targets, but more conservative entries in that case. Make sense? Hopefully that helps. But again, there's no right or wrong. This is the H4M15 mean reversion. So this is the 4-hour chart. Difference between the 80 and the 70. Entry there or entry there. So you got in short there or you got in short there. Which one worked the best? 80. Always will. However, there's nothing wrong with doing that and exiting on that. It's just that you'd have taken 3 positions rather than 1. So your drawdown would have been less. So if you're focused on drawdown, you want a higher condition indicator. If you're focused on, if you're not focused on drawdown, i.e. if it's my personal account, I couldn't give a monkey's about drawdown. I do, but not anywhere near as much as I do on a prop account. I've closed out 1.2% loss today because I was worried about drawdown. I would never have closed that on my own account, but I had to because it's prop. I'm being super cautious. Take the bigger RSI extensions. You'll get less entries, but you won't get anywhere near as much drawdown. You'll have missed all that drawdown there because of the difference between the 70 and the 80. But you can backtest this all yourself. Just go to any chart, any time frame. If you're looking for H1M5 mean reversion or H4M5M15 mean reversion, go out, stick some lines on the chart and go, right, if I'd have taken an 80, how many entries would have I had in the last year? 3. Were they good? Yes. So you had 1 entry, 1 exit, 1 entry, 1 exit, 2 entries, 1 exit. 100% strike rate on your shorts. Longs, you had an entry there, worked. You had an entry there, worked. You had an entry there, worked. You had an entry there, 2 entries, worked. Might have got that. That's it. So again, 100% strike rate on your longs. 100% strike rate on your shorts. And that's on the DAX as well. I don't even position trade the DAX. But you can do this. There's a whole video on the website about this, on YouTube, sorry. Actually, no, it's on the website as well. If you go to the RSI and TDI dashboard, how to backtest the RSI and find an edge for basket trading. That video is basically exactly what I've just shown you there. How to backtest this. This is why I use the RSI. It is so simple. Literally, a child could trade the RSI and position trade. There's a set of rules. There's a condition that gets met before a profit take. And this is the condition that gets met before a profit take. This is the bank's extension of a squeeze before they make their profit on their move. All we're doing is we're following the banks, but we're jumping on when they're ready to take their profit rather than when they're going to go on the move, because we can't forecast when they're going to go on a move. We can forecast when they're going to take profit. Much easier to mean revert their moves than it is to try and predict which way they're going to go first. That's virtually impossible because you just can't tell, can you? Brian, CPI didn't happen today. Not much, did it? So we are mean reverting this move quite a lot. US dollar Swiss. So we, it's getting a bit stuck, isn't it? A little bit stuck. But not, don't know. Wait and see what happens. We'll have to wait and see what happens with these US dollar moves. Too early to tell at the moment. The indices certainly look like the US dollar is going to rally. There's ADR. Look at that, to the pip. Look at that for a ADR advert. ADR, the wick. Doesn't get much better than that, does it? Only that happened every day. We'd all be millionaires. Right, I'm going to leave it there. Anything you need, let me know. I will be in a Telegram group. Back tomorrow at 7:50, same time for the London session, 2:24 New York. We'll see how we get on with the US dollar over the next day. GU complete unwind, is it? Oh, yeah, totally unwound. 100% unwound. We got a bit of a weak pound at the moment. I just noticed we got a weak pound. I've got some shorts on pound US and pound Swiss, and I've got a long on the euro pound, and they're all kind of going into profit now. So I knew we were having a weak pound. So this is a combination of that US dollar strength off the back of the move, and the weak pound has brought it all the way back to origin. So total A-shaped recovery, propulsion gap filled immediately. So yeah, we'll see what happens though. This could well be the start of some weakness in the US as well. Wait for the pound tomorrow. As soon as that pound's out the way tomorrow, we will know, I think, a little bit more, because the US dollar, I get the feeling tomorrow is going to be one of those days where we're going to get 200-300 ADR moves across the board. I've just got this feeling. It's been so quiet for 3 days. It's like the calm before the storm. There's something coming. There's a bomb coming. We're just waiting for it to kick off. And tomorrow at 12 o'clock is the last interest rate rise for a good couple of weeks. So I think that's possibly it. We'll see. Anyway, I'll leave it there. Anything you need, Telegram group. Otherwise, see you tomorrow. Have a good afternoon, evening, or wherever you are. And yeah, see you guys tomorrow. Have a good one.